Now we will learn the second part of the financial statement of a not-for-profit entity, which is statement of activities. A statement of activities is just like an income statement for a for-profit business. In this statement of activities, a not-for-profit organization will list all of their revenues and expenses, and the difference what they will find, they will call it changes in net asset. Remember, there is no stockholders' equity, and we don't calculate any profit for a not-for-profit organization. Rather, the difference between revenues and expenses will be shown as a change in net assets on this statement. And you will see here in this statement there will be two columns, and those columns will show the changes for two types of net assets which you already learned. One is net assets without donor restriction, and another is net asset with donor restrictions. And these total changes will also be equal what we will show on our statement of financial position. So the purpose for this statement is just to give an idea to the financial statement users that how donations are received, what are their major sources of donations, whether they are earning lots of exchange revenues, and the donations they are receiving or the excess amount they have, what we call net assets, are attached with some restrictions. And at the same time, you will also get idea about the expenses of that entity. Now here you will look one important thing in the statement of activities. You will see separate columns to list all those changes with donor restrictions and without donor restrictions. Now remember, when a donor offers or donates some cash or any type of items with some restrictions, we list it under with restrictions. And when these conditions or restrictions, no matter it's related to time or uses, are fulfilled, then we have to remove it from with restriction category to without restriction category. And you will see those changes are also shown on statement of activities. And remember, if you want to spend on anything, any expenses, you need to do it from without donor restrictions net assets. So you may have some net assets with donor restrictions, and that will be used for a specific purpose. But remember, you need to remove it from with restriction to without restriction and then spend it. That means we will also do a reclassification journal entry before recording that expense related items. Now, you will also see two major categories of expenses. All not-for-profit organizations classify their expenses into two major categories. One category is program service-related expenses. Another is supporting service-related expenses. Program service expense means all those expenses that are related to the mission of the entity. For example, if it's a Cancer Research Foundation, so any amount they spend on cancer research or related activities, that will be their program service expense. On the other hand, supporting service expense means that other expenses except those mission-related activities, that could be any administrative cost or any fundraising expenses. Now, these categories are important because donors or any external users would like to know how much money they are spending on that great cause or related to their mission versus how much money they are spending for other administrative costs also fundraising expense. And at the end, they can check the ratio. That means program service expense to supporting service expense ratios. Remember, higher the ratio, better. It indicates the efficiency, how they are utilizing their all money they received to fulfill their mission. You will also see another part of their statement is a statement of cash flows, and you will see it's pretty much similar to the statement that for-profit organizations prepare. And FASB also classified into 3 categories of activities. How we list all changes in cash. These are operating activities, investing activities, and financing activities. And a not-for-profit can use either the direct or the indirect method. Well, you know, just like for profits, FASB is also encouraging to prepare the statement of cash flows for not-for-profit following the direct method, because direct method is easier to learn how the cash amount is generated, how they are doing all cash spendings. Now you will see the 4th type of statement, which is a statement of functional expense. This one is very important, and it's a major difference between a for-profit financial statements and a not-for-profit financial statement. For a for-profit business, they don't need to prepare this statement of functional expenses, but not-for-profit, it's now required. And you have to put as a separate statement or as a part of a footnote or within their statement of activities. Here, a not-for-profit will show a detailed analysis of all of their expenses. It's really crucial to know how this huge amount of donations are used or spent. So whether they are utilizing it for all those specific causes related to the mission or other administrative fundraising, even if it is for the specific mission related or program service expenses, within that you may be interested to look at that the major categories of expenses. So you will see the example in the textbook that they have different columns, and those columns are showing the major categories of expenses. Of course, they will have the 2 major categories, program service expense and supporting service. Within those categories, you will also see their subcategories. So it is really an important statement for not-for-profit entities. Now I'll take you to the textbook just to take a look at the examples of those statements, and we will learn little directly from the book. Let's look at the example of statement of activities from your book. Statement of activities is just like an income statement. They listed all of their revenues and contributions they received, and they also showed all of their expenses. You learned that expenses are categorized into 2 major classes: program service related expense and supporting expenses. So if you subtract all of these expenses from their total operating revenues and other support, you will get the changes in net assets. Remember, the difference between revenues or contribution and the expenses is known as the change in net assets. We don't call anything like net income. And this change we added to the beginning amount of their net assets or the previous year's ending amount of the net assets, and that will give you the ending balance of net asset for the current years. But remember, everything they will be presenting, they have to categorize into 2 columns: without donor restrictions and with donor restrictions. Now I'll remind you 2 important things. Number 1, there might be some donations with donor restrictions, and the restrictions are fulfilled either it is time related or specific purpose or task related. So they will spend those donations, but they cannot directly spend any money from these with restriction amount, so they will reclassify. That means they will move that amount from with restrictions to without restrictions. So you will see the amount is $406,000. So that amount, that means restrictions are fulfilled, and they reclassified it or moved it from with restriction to without restrictions, and then they spend it. Second thing, I'll show you that if you look at the bottom of each column, without donor restriction and with donor restriction, you will see the changes here. Changes in net assets without restriction is 638K and with restriction is 219K. And if you add the net assets amount from the past years or beginning balances, of course, these are categorized into with restriction and without restriction. You will find this current year's net asset amount. So first column is without restriction. Their net asset without restriction is 1.7 million. With restriction is 2.389 million. And this is the amount you will also see on your statement of financial position or under the net asset categories. You remember, instead of owner's equity, we show the amount, what we call net assets, and of course we classify with restriction and without restriction. Let's check it. Without restriction net asset, what we got from our statement of activities is 1.7, with restriction is 2.389, and that's the amount you will see on your balance sheet like our statement of financial position. They are total without restriction is 1.704, and here you will also see with restriction, this is the amount, and if you add these two amount, you will get your total net assets. After adding these two, 2.38 and 1.704, you will get their total net assets. This is really important. If you want to measure the efficiency or performance of a not-for-profit entity, you have to look at their net assets, and you have to look at their changes in net assets, and of course looking at with restriction or without restriction is also important. And secondly, if you want to measure the performance, you will look at their expense ratios, how much they are spending for their mission related or program service, and how much they are spending on supporting activities. Now let's look at the special part of the statement, which is a statement of functional expenses. And it is required only for the not-for-profit entities, where they will show a bigger picture of all those expenses. Of course, the two major categories you will see here listed as program service, which is related to their cause or great mission, and supporting activities. That means related to other administrative or fundraising related expenses. Now, if you look at their program service, this charity organization, their major areas in spending, these are clean street, feed children, house homeless. So these are the major areas related to their mission or cause where they're spending their money. So they will all show those major categories under program service, and they will also show supporting activities. And usually you will see it's very common for most of the not-for-profit entities, two major subcategories under supporting activities. These are general and administrative expenses and fundraising. And of course you have to add up all these subcategories to get here total program service and to get total supporting service. And you will also see the total column, that is horizontal additions of all those subcategories. Now you will also see an example of that organizations, how they prepare the statement of cash flows. according to FASB's requirement. They classify all of their activities into 3 categories: operating, investing, and financing. And it's good to see, of course, always like positive cash flows from operating activities. And you can also compare from previous year to current year how the amount of cash is changed, and this cash balance will match with the cash they report on their statement of financial position.